Imagine waking up one morning and opening your trading platform to see gold and silver prices plummeting like never before, a shocking bloodbath unfolding right on the CME, the world's largest commodities exchange, and you realize this isn't just another market hiccup. This is historic, a chain reaction that's sending shockwaves through portfolios, retirement accounts, and everyday Americans who thought their savings were safe. Welcome to Metal Market Insight, where we break down exactly what's happening, why it's happening, and what it could mean for your money in the next crucial months. But before we dive in, make sure you hit that subscribe button and ring the bell, because missing the next update in this fast-moving story could cost you more than just profits. Now, let's rewind and understand how we got here, because this story is anything but simple. Over the past few weeks, traders on the CME have watched gold and silver charts turn blood red almost every day. Massive sell orders, sudden spikes in volatility, and liquidations hitting unprecedented levels. Some analysts are calling it a correction, but make no mistake, this is much deeper. The usual reasons, like interest rate fears, inflation data, or dollar strength, are part of the story, but there's a hidden layer that most headlines aren't covering. The reality is that behind the scenes, institutional players, hedge funds, massive ETFs, and even some central bank-related entities have been repositioning, and their moves are creating domino effects across the precious metals market. What we're seeing is a combination of forced selling, margin calls, and algorithm-driven liquidations that are magnifying each price drop. If you thought metals were safe, this moment is rewriting that narrative in real time. Now, why does this matter to you, sitting on your portfolio at home in New York, Chicago, or Los Angeles? Because these are not just numbers on a screen, they are signals of systemic stress. When gold and silver fall this sharply, it doesn't just affect traders. It rattles confidence in broader financial markets. People start questioning safe haven assets. Retirement accounts lose value, and small investors feel like the rug has been pulled out from under them. But here's the twist. History shows that moments like these, while terrifying, often create opportunities. Those who understand the story behind the chaos, who follow real insights rather than headlines, can navigate through it with strategy rather than panic. That's exactly what we do here at Metal Market Insight. Decode the chaos so that you know not just what happened, but why it happened and what could come next. The sell-off on the CME isn't random. Data shows that over the last 72 hours alone, billions of dollars worth of gold and silver contracts were liquidated. Algorithmic trading amplified each move, creating a waterfall effect. When large leveraged positions get liquidated, it forces even more sell orders, accelerating the drop. And here's something many traders overlook. The CME operates under rules that make these liquidations automatic, meaning human emotion is sidelined, and the mechanical process can drive prices lower than fundamentals would suggest. That's why you saw silver drop almost 8% in a single session, while gold wasn't far behind. It's the perfect storm of automated trading, leveraged bets, and sudden market sentiment shifts. But the story doesn't end with numbers. The human side of this crisis is just as compelling. Everyday Americans who thought they were buying a safe haven are suddenly questioning their financial decisions. Jewelry demand fluctuates, coin collectors panic, and investors scramble to understand what went wrong. The markets are brutal, yes, but they're also highly informative if you're willing to look beyond the fear. At Metal Market Insight, we dig into this data, piece together the narrative, and provide actionable insights so that viewers like you don't just react, they understand. Now, let's talk strategy. In moments like this, the first reaction is panic, but smart investors know that volatility creates opportunity. Some analysts suggest holding steady, because historically, bloodbaths like this are temporary. Others see this as an entry point for accumulation at discounted prices. What's crucial is understanding the forces at play: margin calls, leverage positions, CME-specific liquidation rules, and global macroeconomic shifts. Each of these factors can either exacerbate the fall or signal a turning point. Recognizing the pattern is what separates those who survive from those who panic. And here's where you come in. I want to hear from you in the comments. Are you holding through this drop, or did you sell? Share your strategy, and let's build a community of informed traders and investors who aren't just reacting to headlines. And if you found this insight valuable, share this video with someone who's sitting on precious metals right now. They need to hear this story as much as you do. Back to the numbers. The CME bloodbath has created ripples across the globe. Asian and European markets are reacting to the drop in US trading hours, and analysts are watching closely to see whether this is a localized liquidation event or a precursor to a deeper market shift. While retail investors panic, institutional players are quietly repositioning, sometimes doubling down in ways most people don't notice. That's why staying informed through channels like Metal Market Insight is critical. You can't rely on generic headlines or quick financial news snippets. Understanding the full story is what protects your money. It's also important to note that silver, often called the poor man's gold, is showing the most extreme movements, Its volatility is higher, its market depth smaller, and the impact of leveraged trading is far more pronounced. When silver drops sharply, it can move in ways that defy conventional expectations, which is exactly what we've been witnessing. Gold, while slightly more stable, isn't immune. The interconnectedness of these markets means that a shock in one quickly reverberates in the other, creating a synchronized panic that is as dramatic as it is unprecedented. So, what's the takeaway? If you're watching the CME, if you're invested in gold, silver, or related instruments, now is the time to pay attention, not panic. Understanding leverage, market mechanics, and macroeconomic forces isn't optional. It's essential. And that's the core mission of Metal Market Insight. Breaking down complex, fast-moving events into clear, understandable narratives that help you make informed decisions. As we close this update, remember this: volatility creates both risk and opportunity. The gold and silver bloodbath on the CME is a vivid reminder of how markets can behave when leverage, automation, and panic collide. But it's also a lesson in strategy, patience, and informed action. Stay alert, stay informed, and don't let fear dictate your decisions. Hit subscribe if you haven't yet, leave a comment with your take on this crash, and share this video with friends or colleagues who need to understand what's happening before the next wave hits. At Metal Market Insight, we'll continue tracking this story closely, bringing you the insights that matter, because knowledge is your best defense in turbulent markets. And remember, the next opportunity could be just around the corner, but only if you're paying attention. So stay connected, stay curious, and let's navigate these turbulent waters together.